Good afternoon. Good afternoon, dear AML community. On behalf of Lithuanian Center of Excellence in Anti-Money Laundering, Finance Latvia Association, and our RegTech company SAL, I welcome every one of you to our International Financial Crime Experts Virtual Meetup. It is really great pleasure to see so many financial crime experts at one place. To my knowledge, we already have around 200 participants online and still counting. Together with Finance Latvia Association and SAL, we decided to take joint actions and organize an event that will be based on real examples, practical advices, and full of valuable insights. Experts from UK, Nordics, and Baltic countries joined us today and will be sharing their expertise, and I really hope help us answer an extremely important question: how to share financial crime intelligence without compromising privacy or regulatory compliance. Financial crime is still on the rise, and current war situation in Ukraine will give even more unforeseen challenges for financial institutions and other obliged entities and regarding financial crime. Organizations and all financial crime experts are looking for better way to fight financial crimes. I personally believe that collaboration and financial intelligence information sharing on national and cross-border levels can be a key solution for it. However, at the same time, we still see uncertainty and regulatory or privacy barriers. That's why today we are bringing industry experts across Europe to take up the discussions on how to foster industry-wide collaboration and overcome the barriers of financial intelligence information sharing to fight financial crime more effectively. We strongly believe that during our event you will capture valuable insights which will contribute to the mission that we all share: preventing and fighting financial crimes, since we know that this goal of ours is only possible to achieve through cooperation and knowledge sharing. Please be active and raise questions via chat function in WebEx platform. I know that you have possibility to raise hand. However, I really encourage to use chat function to ask questions. All your questions will be asked during panel discussion. And without further delay, I would like to introduce our first speaker. And it will be Nick Maxwell. And Nick Maxwell is the head of the future of the Financial Intelligence Sharing Research Program. And Nick will read a presentation about lessons in private to private financial information sharing to detect and disrupt crime. Nick, thank you for joining us here today, and the floor is yours.
Thank you very much. And can I just confirm you can hear me okay?
Yes.
Wonderful. Well, thank you very much for the invitation. And it's a very important time, obviously, to be focused on effectiveness when it comes to financial crime, given the very concerning events, obviously, in Ukraine, but more generally, the range of threats which are presented to financial systems, the laundering of the proceeds of crime, continues to be a challenge which, largely the response from public agencies and from regulated entities is not yet responding in a way commensurate with those threats. So we have a big challenge to be more effective and to be more efficient. I'm delighted to be speaking to you for this event in particular, because I think looking around the world, we actually see some of the most energy and dynamism and fresh thinking in the Baltic and Nordic regions. So really delighted to be part of today's discussion. So I'll open the slides. And I believe I'm in control here. So in terms of questions, please do post questions in the chat as I go. And we probably won't have time just in that first session where I'm presenting, but we're going to capture all of those questions and we're going to discuss them as a panel with all of the speakers later on. So don't hold back with your questions. And in fact, it would be great for me to see them after I've finished. And I'm hoping to be able to respond to some in written, as well as our panel discussion later. So don't hold back. I'll just move this slide. Fantastic, everything works. So I am speaking representing the Royal United Services Institute Future of Financial Intelligence Sharing Program. RUSI, or the Royal United Services Institute, is a think tank. It focuses on a wide range of security issues, but we have a dedicated Centre for Financial Crime and Security Studies. And while RUSI is hundreds of years old, the centre is, I believe, around 8 years old now. So relatively new, relatively young. And in that time, we've contributed a lot of research publicly available to support thinking, policy thinking around some of the big challenges when it comes to financial crime. The FFIS program focuses on issues, processes, organization related to public-private information sharing or private-private information sharing, and the contribution those processes are having to results. So I think everyone will be aware in this audience that, really our system, which was designed in the 1980s in a paper-based banking world, doesn't lend itself very well to detecting networks of organized criminal activity. Our system relies on individual regulated entities doing their best to look at their data and their business and to identify patterns of criminality and then report those through suspicious activity reports or transaction reports. But of course, the underlying crime threat is spread across multiple institutions. It's highly, from a professional money laundering perspective, highly adept at evading detection techniques from one particular institution, and of course operates cross-border. So analytics on silos will always have a much lower efficacy in detecting those patterns of risk compared to analytics on networks. And we have these big challenges in the AML-CFT regimes generally, that regulated entities are operating in silos. Both public and private sectors work largely from their own fragmented data that they can get access to. And so there's limited visibility of the threats and how they connect across institutions. And therefore, in most jurisdictions, there's a problem of too much reporting, which is driven from a regulatory perspective. So it's much better to report rather than under-report. So this drives a lot of reporting, which is not necessarily useful or used by law enforcement. Public-private financial information sharing has been one form of how this type of information asymmetry has been addressed. And of course, there's a lot of initiatives in your region with regards to public-private financial information sharing. And we published a survey back in 2020, which looked at the previous 5 years and how public-private financial information sharing partnerships had grown. And we looked at 23 partnerships around the world and looked at their evidence of impact, as well as at that time how they'd been responding to COVID-19 as a threat, and really being able to combine the public sector's awareness of, well, what really is criminality, or what is the issues which are priority interest. It may not be that every crime is actually going to be fully investigated. So what are the priorities here? And where the law allows to support tactical information sharing between public agencies and private sector entities, so that the private sector entities can have a better steer in querying their own data and sending suspicious reporting, which then is much more relevant, much more timely, and hopefully useful for criminal justice effects. So we see that growth in public-private information sharing And that's a kind of geographical representation of the jurisdictions that have a public-private partnership surveyed in that paper. Blue represents jurisdictions where there's a national public-private partnership, and yellow represents some form of link to a transnational partnership. And the most significant of these is the Europol Financial Intelligence Public-Private Partnership, which of course Lithuania has presented at and is active within. So we highlight those results, criminal justice results, but also that collaboration on typologies, the co-production of typologies, the benefits in terms of high quality feedback coming back to regulated entities, again about priorities. No system can really work very well without priorities, but in the past, the AML system has certainly become quite relaxed about anti-money laundering entities, regulated entities not really having priorities and having to cover everything. But of course, covering everything usually means you're not covering anything particularly effectively. And partnerships have supported this kind of trust and also innovation. A lot of partnerships have supported a space for creativity, for looking again at technology and how legal and regulatory instruments could be used to better effect. But I'm going to highlight now some issues from a current research paper, which isn't published yet. So you're getting something very fresh at the moment on lessons from private financial information sharing. So public-private information sharing is still under development, but in a lot of countries, it has established itself. But in private sharing, it's perhaps that next frontier of collaboration to address economic crime threats. And our study hopes to describe that current landscape, to identify the impacts and learnings from existing private sharing platforms, and to explore legal or policy issues which might be relevant to the adoption of those platforms. And why is this interesting? Well, as we set out at the start, there's a compelling theory of efficiency and effectiveness advantages from private sharing. It takes a network to defeat a network. But actually, we've seen very limited historical deployment of private sharing to respond to these threats. However, things appear to be changing. So historically, there's been a siloed approach in terms of regulated entities sharing, but also in terms of different types of economic crime. So fraud and anti-money laundering have often been approached separately within regulated entities and have a history of a different regulatory and legal framework to them. But we do see increasing recognition of the value of looking at both and other domains of economic crime together, and the insights that can be drawn from identifying risk in one domain, how that can be transferred to another domain of economic crime, whether it's fraud to AML or vice versa. Of course, most fraud will then have a money laundering component as a predicate crime, but also there are forms of money laundering which in and of themselves are also fraud. So there's a kind of complex relationship between the two domains. There's considerable ongoing policy and practitioner interest in private sharing, and for the first time in this study, we bring together that range of current practice all around the world. Just some highlights of some of the policy initiatives we see. Of course, there's a lot in Lithuania, but at the FATF level, at the international level, we note the really quite strong emphasis under the German presidency of FATF over these last 2 years, or almost 2 years, looking at collaboration and technology to support more effective outcomes. And there was a paper published in July of last year, and there is a new paper expected mid-2022, really looking at how can the international standards support more effective collaboration and collaborative analytics. The Netherlands has a national joint action plan, which from 2019 commits to a network transaction monitoring utility, the TMNL, transaction monitoring NL utility, and it also supports forms of post-suspicion private sharing. So we see legislation coming from that action plan, but that action plan was a public-private collaboration, a strategic vision for the future. Likewise, in the UK, the Economic Crime Plan 2019 to 2022 commits to supporting pre-suspicion and post-suspicion private sharing. The US has a long-standing legal regime that supports private sharing under the Patriot Act 314B, but in recent years we actually see, and months even, we see a lot of innovation in the use of that legal gateway. Singapore has published a very interesting proposal for legislative reform and the establishment of a new entity which would be housed within the regulator, the Monetary Authority of Singapore, but would essentially be a private information sharing gateway or platform with various tiers of information sharing, but the kind of highest tier of information sharing would be to share exited customers who have been exited and then filed against as a suspicious entity. And that entity is then held on record within the Cosmic platform to avoid this problem that's been identified by the Singaporean authorities, that all the work goes into identifying a suspicious entity that's then exited by one particular regulated entity, and the suspicious account is, or the suspicious actor then re-enters the financial system at a different institution. And really, so the whole process is, limited effectiveness, a lot of cost, and therefore big efficiency problems, and may even be contributing to teaching, improving the capacity of criminal parties because they learn what triggered their exit in one particular financial institution. So this Cosmic platform seeks to avoid that risk displacement problem. When we're looking at these platforms, we look at economic crime altogether, so a bit of a catch-all term for both AML and fraud, but there's also other forms of economic crime and proliferation finance, sanctions, of course. I wish we had spent more time on sanctions in this study because obviously it's the issue of the day, but sanctions are a really ripe threat area of economic crime for collaboration. And of course, many of the types of sanctions that we've seen put forward recently require a huge amount of work for the regulated entities to understand who their customers are supplied from and any relationships there. So again, there could be huge inefficiency if one regulated entity has established a point of risk and it's not being shared with other regulated entities. Or perhaps there's risk that's spread across multiple institutions. So in the survey itself, we cover 15 platforms, and you can see here is how it's split out across those different jurisdictions. We don't believe this is comprehensive of the world in terms of different private information sharing platforms, but we really do think we've caught some of the most ambitious, the most developed, and some of the largest when it comes to membership or data that they are processing. And you can see that they're roughly balanced across whether they are fraud focused, so in some way their legislative environment really focuses them on fraud as the threat, whether there is a view within the platform that the platform can cover both fraud and anti-money laundering, again, normally by virtue of a legal regime that doesn't distinguish between the two. And then there are some platforms that are really dedicated to money laundering threats, again, normally by virtue of their legal basis. And we see a variety of practice. So we can talk about private information sharing, but I think what is more useful is to talk about the capabilities that private sharing offers a jurisdiction or a community in responding to economic crime threats. So we might think about data-driven typologies of economic crime threats. So we talked about public-private financial information sharing partnerships and the dialogue that they support on typologies or behavioral insights into economic crime threats. But if we really work from the data, we're able to see a much richer picture, particularly if it's connected transaction data, to support the development of typologies of economic crime threats. And then obviously more interesting kind of application of machine learning to identify threats that humans and associations that humans just wouldn't be able to spot. Private sharing can support messaging communication and does in many jurisdictions. And Salve obviously have supported messaging communication in their platform. We see that in the US in 314B. The main use of 314B has been bilateral messages between different institutions, normally around sources of wealth, around a wire transfer. So that can be useful. It can be used to enhance an understanding of risk. It can be used to discount a concern or explain away a concern that doesn't then need to be filed as suspicious. But we also see collaborative transaction monitoring, and this perhaps is where those, that kind of big leap forward in effectiveness and efficiency can take place. So, one, having the connected data is a big data engineering effort, but TMNL in particular in the Netherlands has broken new ground in achieving that. We also see a number of platforms that support broad connectivity between transactions to be able to run alerts over that. And that can happen with the data being shared in bulk, or it can happen through forms of privacy enhancing technology. We also see adverse incident databases, and the Singapore example was a good example of that, because that's where an incident, in this case an exit decision, has happened, and then it's being shared with other members through the platform. So the risk identified by one financial institution is then able to be shared, and so the work doesn't have to be duplicated in whole, though obviously each regulated entity will need to take their risk-based decision on that information. We also see, really for cases, the idea that financial institutions will come together and they will really work a case together with collaborative intelligence and pooled shared data. And we see that particularly in the United States as a response to specific cases, often with a link to a public agency request for information. So there's a real link between public information sharing and private collaboration to develop the case. So you can see that not all the platforms have all of the capabilities. So private sharing is quite a broad term. And when we really want to get into the detail, you probably need to think about which specific capabilities do we want to have, which specific capabilities do the platforms offer. There's a lot of variation in practice. I won't go through all of these points, but the variation in regards to platforms that we observe through our survey includes very different relationships with the privacy statute in their respective jurisdiction. Sometimes there is a specific enabling piece of legislation for the platform. Sometimes the activity is intended to operate within an exemption to the privacy statute, or on data which is outside of scope of the privacy statute. Perhaps corporate data, for instance, under GDPR. But in other cases, there is a justification for the use of the platform under principles established within the privacy statute. There's a wide range of variation with regards to the data, what threshold of data is shared, the sectoral coverage, whether the platform itself has visibility of the data or not. Sometimes the platform has all of the data, and sometimes it has no visibility of the data. Therefore, there's a different role in whether the platform generates an understanding of financial crime risk that the members didn't already have. And therefore, we see a different approach in terms of, okay, well, what are the information security obligations on both the platform and the members? And what is the engagement with the data subject? So in some instances, the data subject is informed of their inclusion in the platform, and in others, that is prohibited. We see a wide variation in practice right now, particularly between fraud and AML, but even within the AML space. So we do see the benefits, and we record the benefits in terms of improved detection rates, reduction in duplication, faster speed of response, and a reduction in risk displacement. And there is some evidence for this factor of reducing the propensity to file a suspicious activity report because private sharing is removing some concern. So that's really the initial presentation. I hope that's helpful and to kick things off. And yeah, very much look forward to taking the questions, and we discuss them in panel after all of the presentations have been put forward. So with that, Imantas, I'll hand back to you. Thank you very much.
Nick, thank you. Thank you for your presentation, and I really hope that all participants found the same interesting as I did. I already saw the question regarding agenda, so I will ask our support team to put agenda slide, and we will go through agenda. So after Nick presentation, we have Ekaterina Matsuka presentation, and we will shortly jump in Ekaterina. After that, we will have Martin Hissing, and he will talk about Nordic KYC process and program, let's say. We will have Tavi, which will present our ML bridge, and later, last but not least, we will have Linus from Luminar Group, and he will present some key practical benefits and examples regarding information sharing. And we will sum up this panel discussion with all the participants. So coming back to the Ekaterina and the Ekaterina Matsuka, and I hope I pronounced your surname correct. And she is the director at Data State Inspectorate of the Republic of Latvia. Ekaterina will present effective implementation of ML measures in balance with the GDPR. Cannot wait to listen your presentation, because always this question always is on the top. So who is the most important, ML or GDPR, or it can be combined. So Ekaterina, the floor is yours.
And thank you also for finding time to attend this conference, and for organizers for organizing this conference. Yeah, as I see from the agenda, maybe I'm in the minority, because I'm representing the state institution, and state institution which is responsible for the personal data protection, and not financial institution or IML or fraud. But I will try to give my presentation on the perspective of the personal data protection. So we have GDPR, we have IML, and as you said previously as well, that GDPR in many cases is a obstacle for something. And as director for the Data Protection Authority, I hear quite often the statement that, okay, we want to do something, we want to do a good thing, but then comes GDPR, and GDPR does not allow us to do anything. And GDPR, for some people and for some time, it's like a big beast, and people are very afraid of it. From my perspective, GDPR is not a beast, it's not an obstacle, because even GDPR itself, in their recitals and then the articles, provides as well possibility and necessity of the free data flow. So GDPR set the rules how we have to process data, personal data, and GDPR does not prohibit processing as such. It's like you have the rules. You play. We are in a Lithuanian conference. You play basketball, and you have some rules. And if you do not follow the rules, your pitch will not be counted. And if you do not follow the rules, you will be out of the game. So the same with the GDPR. Personal data protection, it's quite important issues, because the people are this data subject, and it's all people, even us, even their employees of the financial institution who makes risk assessment, who research their clients, and the clients of the financial institutions. All of these people are data subjects. So when we are talking on processing of personal data, we talk on the human rights and persons' rights on privacy, and persons' right to be treated equally. And to treat their personal data as some value. And for the GDPR, which is most important, is legal basis, because in what GDPR says that if you want to process data, you have to have legal basis. And for financial institutions and for the AML, this legal basis is AML directive and national legislations in the countries. And this national legislation, we can as well divide this legal basis. First of all, it's a legal obligations to which the controller is the subject. And for the financial institutions, in most cases, of course, my examples, it's Latvian legislation, but I presume that in all European Union countries, this legislation is quite similar. So in some cases, legal obligations are provided in the law. And for example, in the national legislation, I presume as well, it's for the all countries, it's prescribed that the financial institution have to identify their client. So the basic information, if it's person, then it will be the name, surname, identification number, maybe some contact information. And this is prescribed already in the law. It's an obligation for the financial institution to do it. So then legal basis for the processing in the GDPR, this is the legal obligation. And in this case, financial institutions even does not have any choice, because they have to be compliant with the law. But in some cases, the legislation, or this is AML legislation, or this is legislation on sanctions, or legislation on fraud, provides maybe more general terms. It's not like all legislation and law prescribes us what data we need to collect in order to fulfill rule know your client, or in order to make this client research. But this law prescribes us that financial institutions have to do it. They have to collect information that gives them a possibility to make a risk assessment. And in this case, this legal processing will be task carried out in the public interest, because this public interest is, and we can say that anti-money laundering sphere is even substantial public interest, because it's connected with taxation, it's connected with the well-being of the country, it's connected on the economical situation in the countries where all people are paying taxes and living. So these public interests are substantial public interest, which as well allows in some cases process even biometrical data as face recognition. So, for example, if you want to get the account in the bank, you need to show your passport, and if you do not do it offline on the spot, you do it online, then the financial institution have a right to make your photo, to put the photo on your portfolio, because they also need to understand that you are really this existing person, and check your photo and your biometrical data. So, but in this case, this all is done because the law prescribes for the financial institutions to do so. Another way, and these two first legal grounds, they mostly have to be put it in the law. That's why it's quite important to also from the government point of view to work on the clear and precise legislation in order to put these rules and these borders of maneuver for the financial institutions. But financial institutions provide also processes data, for which legal databases would be legitimate interest to protect their own interests, as well some anti-fraud actions, as well security measures, as well some judicial issues that could be provided. So in this case, when it's legitimate interest, there is no anymore law. There is this interest of the financial institutions, and in this case, before starting this processing, financial institutions have to have as well impact assessment on this data processing. So in order to check the balance, if our processing will not will not be too invasive for the data subject private life. Of course, there is the interest to maybe prevent the fraud, but on this based interest, there is no maybe sometimes there's no grounds to process huge amount of the data, including like DNS data of the person, because these data, maybe it's very interesting data, but they will not give you such an information that would be balanced with your legitimate interest. So, and for the legitimate interest for the financial institution as well, it's necessary to do and important to do this impact assessment, to do it in writing, so to get documents which would prove that you have done it. If you have some internal documentation where this balance test is prescribed, it's okay. It's not like GDPR prescribes you to do all necessary separate impact assessments. It could be one impact assessment for the different processings. It could be some one document where you do it, but then keep it, because when Data Protection Authority will come to check your activities, they will ask it. One other thing is a data subject consent. This is very tricky thing at all. From one point of view, it's very easy. You have to ask the data subject if he agrees on data processing or not, and that's all. But from other point of view, data subject always have the right to withdraw their consent, and you will have to stop data processing. So in this case, you have to think about there are some maybe different ways how you get data, or then this could be only for the commercial reasons, or for example, sending some advertising to the client, or having analysis of the incomes and expenses on the client, but if he agrees to get such information from the bank. With the data subject consent, from one point of view, it's very easy to get the consent. From other point of view, they can just withdraw it, and then you have to stop data processing. So for the legal basis, you have this legal basis from the IML, from your legitimate interest, from the other national legislation. What is important to set the balance? Balance between this know your client, which says in IML, and data minimization principle, which is set in the GDPR. And that's what I mentioned before. You have to know what you do, for what reasons, and what the results you get. So if this data, the collected data, really can get the results that you want to achieve, for example, you will be quite sure that you can, for example, assess the risk with this data, then you can collect this data. But in many cases, what we see as well, like Data Protection Authority, in reality, people collect data and they said, okay, maybe after some time we will know what to do with them. And this is the very bad approach. As well, there's confidentiality and right of the client to know what data are processed about them. There is exception in the law, and it's as well, I would say, this part of the governmental exercise to put these balances in the legislation on the data subject access to their data, because as well it's understandable that in some cases data subject cannot access their data, which is connected to the IML procedures, and as well storage limitation. There's a lot of data, but the data becomes as well inactual. So if it's not precise, if you collected them 10 years ago, you have to check if there's still precise data for this data subject. If not, delete it and do not keep and store it. And that's why there is things that precise, clear legislation rules. As well, the cooperation between the regulators, because what we see as well from the perspective and the practice, there is one regulator for the financial institution, there's another regulator for the data protection. If these two institutions does not work together, it's quite hard for the private sector and for the financial institution to understand something and to get like a common vision on what we can do. As well, this common vision could be succeed with the guidelines from the regulators on how to do it. For example, in Latvia now we are working on issuing such a guidelines between the regulator on of the financial institutions, data protection authority, and of course with the assistance and involvement of the finance institution association in Latvia. So, and these guidelines would be the good way how to see this balance for their companies, for their financial institutions. But cooperation is a very, very important thing. One thing that as well could maybe said better how to deal with the personal data and so they would be precise. It's uh, like know your customer utility or client research tools. And in Latvia, we have a quite new legislation. It was adopted last year. We are still working on the sub legislation, but on the law, in the law on IML, we already set the rules how KYC utility could be set and could be worked. Law prescribes possibility to have, like I would say, like two big groups of the client research tool. One is the shared closed, another is shared opened. For the shared closed KYC utility, it prescribes that it's one group of the companies. For example, the bank who is working in the different countries and have branches in the different countries can create their own know your customer utility and exchange the information, or different groups of the companies can create their own closed KYC utility. For example, if there is 2 or 3 or 4 banks or bank association who is creating this utility only for themselves. And the shared open KYC utility, its possibility to create such a tool. Somebody calls it register. I would say that it's not register, but yeah, this is more tool where each other person who has some connections to the IML could assess information. And this KYC utility, the aim is to collect information from the law subjects, from the financial institutions, information from the governmental databases, and share this information to others. And this it's a good way, what was mentioned also in the previous presentation, how to make together. It's not like one institution, each institution has to do all their risk assessment, all the findings, and collect all the documents. If one institution already have done it, they can put it to the, for example, shared open or shared close KYC utility, and other institutions can assess this information and they do not have a necessity to collect it one more time. What would be there? Some, of course, some people said that this is more the collection of the data. This is maybe would be some breaching of the data subject rights. But from other point of view, the government in Latvia set as well this safeguards. One safeguard is this KYC utility have to be licensed. So if you want to work with the opened shared KYC utility or closed shared KYC utility outside of the group, you have to get the license. And this license is issued by the Data Protection Authority. So because the main commercial subject will be the data and personal data as well. So as well, the government set the requirements for such institutions in order to have a provide this clear information sharing, this compliance with the GDPR. And requirements for the KYC utility in Latvia if institution want to register as such. It's registration in the EU or European Economical Zone. At least one branch. If, for example, main company is registered outside EU, then at least branch have to be registered in EU region. It's of course the absence of the criminal and administrative breaches also from the institution side of youth when there's no breaches, previous breaches on commercial activities or on the AML activities or personal data activities. As well, this institution have to be without tax debts. Okay, the tax debt could be not more than 150 euro. They have to set the data protection inspector, and this person would help the KYC utility to ensure this compliance with the GDPR. Of course, technical and security measures and standards, like ISO standards or standards which is similar. And in this case, it's prescribed that before licensing, institution have to get the audit report that these standards are compliant. A reputation of the board, reputation of the during the licensing process, reputation of their shareholders, reputation if they own more than 5% of the shares, reputation of the executive board members, and beneficial ownership are checked as well. So they have to have a very good reputation. And insurance, it's a civil liability insurance that have to be provided by this KYC utility institution. And in this case, I think that it was very good way of the government how to legally set this private information sharing tools. And all data subjects are informed that such tool will be existing in Latvia, and as well, if there is some possible, breaches, there is possibility for data protection inspectorate to check it and to check it and to avoid these breaches and check if everything is according to the GDPR. So all of these things, in some cases, people think that data protection is obstacle and breach. I would say that it's not obstacle and not breach, because it gives for the not only financial institution, for all private and governmental sectors, trust and value of the companies and the good way how you treat your clients. And that's why I think that it's good to make this balance between the AML and GDPR and not be afraid of the GDPR and personal data protection, because it gives as well for your company additional value. So from my side of point of view, it's thank you for hearing this presentation, and I think that for some questions that from your side is now appeared, we can discuss within the discussion session. Thank you.
Thank you, Ekaterina. Really thank you for your presentation. It was really interesting, and I listening all the words what you said, and such a proactive data protection inspection. It's probably for all AML professionals a wish. So I saw already the questions popping in, and I hope I'm still encouraging to ask more questions. And these questions, as Ekaterina said, we will answer during the panel discussion. So without further delay, again, I want to introduce our other speaker. So it will be Martin Hissing. I hope I pronounced the correct way. Martin is the head of product management at Invidem AB, and Martin will present the Nordic experience about building the KYC ecosystem, and I'm pretty sure it will be also a very interesting and valuable presentation. Martin, the floor is yours.
Great. Thank you so much, Hemantas, and hopefully everyone can hear me all right. Pretty big shoes to fill, Nick and Ekaterina. Really interesting presentations. So thank you for those, and thank you for letting me and Invidum be a part of this event. So I'll do my best to explain what we have been up to here over the past few years. Given the rather limited time frame, I'll obviously be happy again to answer any questions coming up. So let me see if I can get this clicker working. Seems to have lost connection, but I'm sure it'll pop back up just a second. There we go. So really briefly today, I'll talk a little bit about our background as a company. I think it's important to spend a few minutes on that because it has a rather sort of big impact on, I think, our major one or a few of our major success factors. I'll talk about our business model and our service. And then I'll try to tie things up with what I see and we see as some sort of key findings and success factors, and also some challenges, going back to some of the things that Nick and Ekaterina has already sort of touched upon in their presentations. So hopefully that sounds like a decent setup. We'll see if I seem to lose connection whenever my phone goes to sleep, so it'll pop back up in just a little bit. There we go. So first of all, we are a standalone company, Stockholm-based, with the Nordic service. I put down who our owners are, which are 6 of the sort of leading banks in the Nordics. And just sort of for context, we spent quite a long time getting a merger clearance from the European Commission in being able to found our company, for it to not be sort of competitively prohibited. So that's something we got that permission about 3 years ago now. And it's been sort of a long road. Even before that, these banks and a subset of these banks have discussed, I think I first came in contact with sort of the thoughts of doing this back in 2015 or something like that. So it's been sort of a long time in the works. It's been groomed really nicely because of that. I think it's sort of the conversations ramped up back, like I said, back in 2015, but then there were some differences in which technology to use. And first there was sort of a Swedish focus to it. And now I think we landed on something where we were able to get the same amount of ownership from all these 6 banks, the same amount of commitment to start using our service. And also there is a history of this type of collaboration between these banks in not only Sweden, but the Nordics, in terms of payment services and identification services. So there is a successful history in doing these type of joint ventures within the Nordic financial industry, which I think is it's been important for us. And just to make it sort of perfectly clear, we are owned by these banks, but we are open to be used as an open KYC utility for the entire Nordic market. And we'll see if we go to the next slide. Just sort of where we are, like I said, we were founded as a company coming up on 3 years ago now. We have launched the first sort of fully functioning version of our service. Having said that, it's still sort of reasonably newborn in terms of what we know we want to do and what we see coming up in the future. And it's that sort of constant balancing act, I think, with launching a KYC utility, is sort of how do we get something out there as far as from a time to market perspective that's small enough to get out, where your owners sort of need to have that stamina and commitment, but also big enough for it to create value, to have the necessary sort of safety precautions that we need to have, because we are coming into one of the most sort of delicate and sensitive parts of the bank's process when we talk about sort of trying to wedge our way into the financial institution's current sort of functioning KYC processes. So it's definitely a balancing act, and one that we're still balancing. We have usage of our service now from our owners, So it's sort of we are up and running in that sense. We still haven't received the critical mass that will sort of make this an unstoppable force moving forward. So we're still sort of working towards that. But having the ownership that we have and the commitment from them, both from an owner perspective and from a sort of first client or user perspective, is certainly key for us. If we look at our business model, I'll spend some time on this slide. First, to discuss sort of the two-sidedness of it, and I'll go into a little bit sort of how the service works from a very high-level perspective, and also which regulations we touch, and going back to some of the things that Ekaterina was presenting. So we have a two-sided business model, as we call it, where we have organizations under AML regulation on one side, so banks and financial institutions and whoever is an obliged player within the Nordic. On the other hand, we have the financial institutions' corporate customers. So we're only working with corporate customers, at least for the time being. And then we have obviously the work that we do ourselves, where we have a data aggregation engine that captures information from all the necessary public sources out there. And we have an operations unit within Invidem that looks at the information that we get both from the end customer in our end customer outreach and from the publicly available data sources, looks at that information, does validation and verification on it, and then package it and send it back to the bank. So essentially the way it works is the financial institution lets us know either by saying that they need KYC information on a particular corporate customer right at this moment, in which case we trigger a case and send an invite to a web interface for that corporate to submit information, or by saying that in December of 2023, we need to do a periodic review on this corporate customer. Please trigger that at the appropriate time. So there are sort of different ways of consuming the service. As far as the regulations go, we essentially have sort of three main regulations that we need to balance and in a sense sort of work around. It's obviously the AML regulation, which gives the financial institutions the right to capture this information. It's GDPR, where we have a sort of a very diligently worked through setup of who is the controller for each sort of processing of personal data within our process. And it's banking secrecy. So I personally probably wouldn't call our service or what we do private to private information sharing. I'd rather call it sort of market collaboration, where the corporate customer is always the one who's in charge of which financial institution gets to see the information. So if we take an example where Bank A tells us that we need to acquire KYC information on end customer 1, for example, we go out and we create that KYC file, partly by capturing public data and partly by going out and asking the corporate customer to submit information. And then we also need to get a consent from that end customer or for that corporate customer to be able to share their information, because it's their information in our service, with one or multiple financial institutions. So the corporate customer is always in charge of who gets to see that information. And the good thing about that is we get sort of a push from both sides. We get a push from the financial institution side because they need to get KYC information or corporate information on the corporate, but we also get a push from the corporate side, being able to tell the market our information already exists within Invidem. So each party that would be interested in that information from the corporate can be directed towards Invidem, and all the corporate customer would need to do is provide consent to share with another financial institution. So that's sort of very high level, the setup. And then we'll see if we can switch slides to the information that we capture. Again, it's sort of very, very high level, but what we focus is on what we call the generic KYC information. So it's essentially the information that the corporate customer provides in the KYC process that's the same regardless of whoever they provide the information to. So we divided it in 5 different sections. It's general information, business, financial, ownership structure, and beneficial owner information. So if we look at the total KYC process, there are parts here that we don't capture within our service. The purpose and nature of the relationship and the risk assessment part is still part of the process of the financial institution. And that's for the simple reason, as I alluded to earlier, those answers would be different depending on the relationship between the corporate and the financial institution. Whereas the generic information, as we've labeled it, is the same and can be shared identically with different financial institutions. And it's also sort of the bulk of the information from a data mass and cumbersomeness as far as providing the information. It's typically the most time-consuming part. So what we have done, which is unique to my knowledge, is that we have been able to agree with our 6 founding banks on not only what those data points that should be part of the generic information is, but also which rules to apply to each data point. So for a specific data point, we have a rule whether we just sort of capture that information and pass it on to the bank or the financial institution, or if we also need to verify that data by taking what the corporate customer has provided us and what we've found from a credible public source, verifying, looking at it, saying, all right, this is the same, and then we can pass that information on back to the financial institution. So it's unique. It's roughly some 180 separate data points, and then some obviously appear multiple times depending on different relationships and such. But that's what I think is sort of one of our key success factors is having that. I mean, let me see if I can get the clicker working. When we founded our company, and we were in sort of discussions, obviously, with our founding banks quite a bit, but also with other utility initiatives. I think I've personally been in contact with some 6 or 7 utility initiatives across the globe in sort of looking at the concept of what we're trying to do and why those utility initiatives sort of failed, or why things went the way they went with those initiatives. And 2 things that seem to sort of be very reoccurring with those other initiatives, and something that we've really taken to heart, is sort of the harmonization of 2 things. It's the data standard that I just mentioned, so that we don't provide a service and then a separate bank needs to ask other types of generic information questions. And the other is harmonizing a periodic review schedule. So we're not quite there yet with the periodic review schedule, but we have an aim to, within the Nordic market, harmonize when the financial institutions capture information on a specific corporate. Not how often, because that's obviously part of the risk assessment within each relationship, but when during the year. And the purpose of that is being able to reach out to the information provider from the corporate as few times as possible. So trying to really, really benefit from doing something once on the corporate end and being able to utilize that multiple times with multiple financial institutions. So those are some of our guiding stars. Some other things that sort of I or we have really sort of identified as important is a long-term commitment from the owners and from the market. I mean, this is certainly no easy endeavor by any stretch. Like I was sort of mentioning earlier, just getting the service stood up on its own takes some time, because it's such a delicate mass of information. It's such a delicate part of the financial institutions' processes. So getting your legalities in order, getting your data security in order, and all those things, it's so important. And then you have sort of the paradigm shift, which is the next step of actually then getting actual usage from the financial institutions and sort of wedging our way into those existing processes. So a very sort of clear commitment and a clear understanding of the why, I think, is very important. And one of the things that's been, I think, our success factor is we've had a very high focus on the corporate customer value, getting this process less cumbersome from them, getting our portal that they enter information into as easily usable and easily to navigate as possible, and making sure that they are in control of who gets to share the information. From a challenge perspective, it's I think the paradigm shift, not just for the financial institutions, but for the entire market. I mean, this has impact even on the corporates. Maybe not so much so the smaller ones, but for the big corporates that have teams or units working with submitting this type of information to their different counterparties, this has a clear effect on them also. And then I'm running out of time, but just briefly mentioning at the end, sort of data quality and data accessibility. Katarina was mentioning this in her presentation on sort of data minimization. For us, those little things are obviously important, but can also be challenging from time to time. If we're only able to get information packages from the sources that are, for example, a bit bigger than we technically need, how do we handle that in an efficient way to filter out that we only make sure that we don't have too much data and don't store too much data, for example? So there are sort of clear challenges there. Some I think the entire market shares, and some I think are specific to us being a utility in this region. So I apologize for dragging out a little bit of time here, but thank you so much for your attention, and we'll be back obviously in the Q&A session.
Thank you, Martin. The time flies by listening to you, and you just made the mentioned shoes even bigger. And Taavi, I asking you to step in. And Taavi Tamkivi is the CEO and founder of a South company. And Taavi will talk about ML Bridge experience and what we have done in Estonia. Yes, so Taavi, this is the time for you.
Thank you, Imantas. Just to check, I hope that you can hear me well, right? So I'm super happy to share our experience here to this kind of wonderful community, because listening to the previous speakers and thinking about the audience where we have hundreds of people, I'm really convinced that we have the best crowd here to figure out many things together, how to resolve these crime-fighting challenges together. As Nick said in the beginning of his call, that like this cross-border data sharing, cross-border knowledge sharing seems to be like a silver bullet that no one has figured out yet. Thinking about the Baltics, Scandinavia, and UK, unfortunately being on the same money laundering or criminal proceeds channels between the West and East or East and West, then we have a lot of common things to figure out and a lot of common knowledge as well. But let me explain what we have done here in Estonia and beyond that. So this is called, 2 years ago we had a dream that crime fighters can align their forces. Crime fighters, AML teams, sanction teams in different banks can start sharing information about their suspicious customers, transactions, high-risk events. Also, as Ekaterina mentioned, that it's key to know what is the reason for data sharing. And in this case, like when the data is shared on case-by-case basis, there's always a meaningful reason behind it. But let me tell what was going on actually. So a bit more than a year ago, 4 leading banks in Estonia, Swedbank, SEB, Luminor, and LHV, agreed to make AML private-to-private AML data sharing program. And no one really knew what it was about. It was just their ambition to do something more than hardly required by the laws. They wanted to exchange more possible FinCrime data. And it's super important that our local regulators started to participate as experts and support the whole initiative, like say in data protection inspection. And the FIU said that, yeah, we're happy to advise you and help you with that, which inserted a lot of confidence for the banks and for ourselves. And thanks to these 2 critical groups of institutions, we were able to launch in last summer, 2021, to launch the test or pilot of the product, or platform, which was meant to exchange data between these private institutions. And like 4 of the banks started to use it on trial basis initially. And I will just tell you about the learnings and conclusions and next steps that we have from this pilot. We concluded it back in early December, as a success, because like all the banks plus all the other banks in the market, like we have 10 participating banks from Estonian market who all said that yes, pilot was successful. Let's start using now it in the full operations. And now on day-to-day basis, there are like more than 60 AML crime fighters from different banks across the country using the AML bridge platform on day-to-day basis. There are like hundreds of different collaboration routes or like different pairs, combinations of banks that can mutually exchange information between each other, like one-on-one, one-to-many. And like there are combinations that like we as organizers are not aware of. We just see that something is happening. More importantly, there's more than 1,200 investigation cases that have been shared already in a couple of months or like since the start. And just to put into perspective, it is like in the same scale that the same banks are like making reports to our FIU. They're making thousands of reports to FIU every year. And now we see that there's like about thousands of reports which are being exchanged between themselves. So like scale-wise, it's like quite massive already, but it's just like very, very early beginning. And banks are claiming that they have saved already lots of money, like thanks to some fraud prevention initiatives, which are also happening on that platform. So there is like AML investigations, but also some fraud mitigation, which I tell you more about. What we are able to see, we're able to see some high-level aggregated numbers from this initiative. So as I said, like we kicked it off back in like July last year, and it like increased quite rapidly into like a couple of hundred cases or investigations exchanged every month. There are different types of the investigation cases or different types of the content which is getting exchanged. Like it's about fraud, like the authorized push payment fraud, the scam, investment scam and love scam, which is happening across Europe. That's a massive problem, and banks claim that to get it under control, partially thanks to the bridge. There are more classical money laundering cases, investigations which are being exchanged, and then this sanction hit resolutions, which is now increasing when we zoom into details further. And the point is that like the number of cases or variety of cases is not limited with these three, but it's like infinite number of more other things that they can define on this platform. And I just wanted to focus on three different things which made the whole initiative possible. And like because like this is about the experience between different countries and different initiatives and communities. So the first really important part was that we didn't restrict the initiative with fixed list of like with limited list of the things that they can exchange. So when we started the project, we mapped out 15 different potential use cases for the banks, just proposed what could work, what might work for them. And we did analysis from legal side of things, from technical data exchange, and also from the business need. And we, through this exercise, we actually mapped out one like possible like use case, which was like around RFIs or request for information use case to exchange between the banks. But the point was that like actually we built the technology in a way that it's use case agnostic, which meant that regardless of the initial selected use case, we actually said that, okay, let's just be prepared for other use cases which might come up over the time. And fortunately or unfortunately, the fraud spiked up. And like after the launch, actually, it was super easy then to add a fraud-related use case on the top of everything else. And now, like as the sanctions is bigger problem, it was super easy to add a sanction use case as another alternative on the top, regardless of what was the initial scope. And as you see, as I mentioned, the sanctions are going. Like on the bottom left graph, you see this green bar, which shows that the number of sanction-related data exchanges has increased like 4 times or 5 times over the last couple of weeks. and this is happening exactly because of the incremental sanctions which have been written out by the government to control and minimize the impact of the war. And banks are like super quickly and positively reacting to these additional sanctions because they're checking more, they're doing more to resolve these like possible hits and alerts faster. And of course, like they need to ask from the counterparties from the other banks. So in some cases, like when the sanction hit was caused by their customer. So like there are like it's possible to send RFI, request for information about the sanction hit, to other bank manually or automatically. It's possible to respond automatically manually depending on the level of integration that each bank does. And of course, like in-house, every bank runs their own AML like sanction screening process anyway, which is needed. But that's like we didn't know that this need is increasing super fast. Before it was like low volumes, not that significant, but now it's like critical. That confirms the conclusion that if you're using the platform, then it's wise not to limit the platform only with one single use case. The other, like which is now progressing really fast, is that like expanding beyond the sanction official lists and dealing with the sanction grey lists or people and companies which are related to the sanctioned entities or sanctioned people, but are not officially sanctioned yet. So like the 50% rule, as it's called in US, or like related close associates of the sanctioned people. And banks have said that they do want to exchange information on the like, crowdsourcing of these RCAs that they have picked up. And again, they want to send one-to-many messages using the breach. And now we're like building up the networks and like input into these networks and input into this crowdsourced database might not come only banks themselves, but also like investigative journalists who are studying about FinCrime. And there's like the day-to-day basis that work is going on to make it possible. And as I mentioned before, like the APP fraud or authorized push payment fraud, which is like the biggest fraud wave is in UK and in the rest of Europe as well. And the challenge was like banks saw that their customers got cheated, like their customers sent voluntarily money to the other bank, and the other bank's account was controlled actually by the criminals. And what banks started to do was that like they started to send claims or like information to the other bank saying that, come on, my customer was cheated and sent the money to your bank. And quite often now this money is claimed back thanks to this messaging because it's happening fast. Again, it was like innovation from the banks, crime fighting teams that made it possible to build this scenario on the top of the like plain framework or like technology that we had agreed. Second is to explain like what is our approach to data and privacy data in general. As also from Ekaterina's presentation, you heard that like there is a perceived debate between the AML and then GDPR, or like financial FCA and data protection inspection. And the point is that like MLROs feel that they need to get greater clarity from the regulator. Okay, I would like to exchange information with my counterparties, but can you tell what exact data points I should share or I cannot share? And the DPI is actually cannot speak for multiple jurisdictions, and they can only comment their own local, give the guidance as we just heard today. Also, there is a vacuum between MLRO's expectations and then DPI's advice that they can give. And the point is that like it's easy to close this vacuum if the technology that you're using defines concrete templates about data points, like which is like corresponds to the minimization, like you're just filling in this data that's hardly required to exchange the information. You make it auditable, so whatever happens later, auditors can check that you did things right. There's always reasoning behind the data that you want to exchange, so it's not random, but actually you can chase back why this data exchange happened. And this actually so great if you're reading the guidance from the like European-wide the regulators, then and also from Financial Action Task Force, then they're claiming already for many, many years that effective information sharing is one of the cornerstones of the well-built AML. Like that's FATF was saying 5 years ago, and now they're working actually to come up with a more concrete recommendations to the governments to make it like more forced to do the data exchange between the private institutions. European data protection supervisor also has said that they support like objectives of the AML legislative, which covers also data exchange. And even like if we're looking to UK, we're working with institutions in UK as well. UK ICO comments the data sharing code as well, that it's possible to do. So like actually there's no vacuum. So it's like great to see that the regulators do support that. It's now a question of like, okay, what is the exact use case? What is the exact platform that we're going to use? So I'm running out of time. I'll just skip a couple of slides. And the last point I wanted to make is that it is possible to make it a cross-border, and we are so close to making it already happen. And I'm like actually quite convinced that people on this call, some of the people in this calls, will be authors of the first global cross-border private-to-private networks, because like we have like there's intent is here, knowledge is here, banks are here who want to do that, and there are there are several local initiatives that also Nick presented, like things which are happening in US and in Mexico and in Australia and Netherlands, which is great, and also in Estonia and in Sweden, as we heard. That's great, but like crime is flowing across the borders. Like most of the like money laundering, bribery funds and so on, they move between multiple countries, and like we need to get need to remove the obstacles, or like so-called obstacles, which limit the cross-border. And as you heard today, these are not legal. These are like based on people's actual perceptions, and like it's just needs time to explain. Refer back to the experiences from the other countries, regulators, and like of course, like it's about establishing local networks, one in Estonia, one in Lithuania, one in London, one in Sweden, and then connecting these networks together. But as I said, like there are already discussions going on to join these local initiatives together. And the main point is that if the like intention is right, like if you're creating AML teams, sanction teams, anti-fraud teams, counter-terrorist financing teams have their clear focus in mind that okay, why are we doing this data exchange? Like what is the true reason, and what is the minimum amount of data that I would like to exchange? Then everything else is possible. Laws are here, guidance is here, technology is here, and yeah, like we can just do it. So I've spent my time. Thank you, and we'll continue into the discussion phase.
Thank you, Tavi, for the perfect presentation, and you are totally right and correct that cooperation in cross-border must be done, and probably we are really close to do it, very close to do it. Okay, moving further, because we're a little bit late of the time schedule, so I'm presenting the next speech. So it will be Linas Sadatskas, and he's leading a fraud unit at one of the biggest banks in the Baltics. It's called Luminor Group, and Linas will talk about practical benefits of information sharing between financial institutions for fraud management purposes. So Linas, the floor is yours, and please stick to the time.
Okay, hello everyone. Thank you, Eimantas, for introduction. I'm really happy today to participate in today's event. And really, today, interesting topic. We have talked about legislation environment. We talked about technology. We had really good statistical information from Tavi, right? So I believe that it's smooth transfer from one topic to another. So today's topic is to discuss and show the practical benefits of information sharing between financial institutions from fraud management perspective. So today, in general, I will talk from two perspectives, from victim perspective and from fraudster perspective, and how this data sharing could be useful for us. So looking into the statistics. So in the beginning of the March, we had a great event in Lithuania for all financial market participants. And as well, I showed some numbers. So I believe that if we would like to talk about sharing of information, it's definitely beneficial to see. So what are the volumes in Baltic countries? And actually, in the Baltic countries, we share 30 million euro losses for the customers of financial institutions and financial market participants. So actually in Estonia, we have approximately 9 million euro losses. In Latvia, we have 11.1 million euro losses. And in Lithuania, 10.2. As you can see, those numbers are quite significant ones, and what actually Tavi presented. So really significant amount was presented, well, not presented, but prevented. And yes, maybe we can think of, well, a bit bigger amount of prevention while looking into the presentation of today's. So let's look into the fraudster, right? And how long it would take for the bank or financial institution to identify the real fraudster, and how long it would take for the fraudster actually to go and open an account in different banks or different financial institutions. So it's now really beneficial for the financial institutions to share this information, and I will tell more why. Let's look to the practical benefit, and let's look into the prevention. So stopping the fraudsters. My first example would be related with money mules, and let's look into one case. Actually, so let's say it's the same person. Let's call the person Tom, and he opens an account in different banks. So bank B, C, and D. Actually, he was convinced to open the bank, accounts because maybe he was paid, and in order to act as money mule, he had to open 3 different accounts. Let's call it one segment here, and always in the fraud scheme we have a victim. So we have a victim in the bank A. And let's take very classical fraudulent scheme. So investment fraud, and let's say investment broker calls to a victim, introduces with a significant income for the week, and convinces victim actually to send some funds to Tom. And then actually the role of the Tom is to transfer the funds to real fraudster in the bank A. So where is the benefit here to share the information? Let's imagine that Bank B or Bank A would have identified, according to their fraud monitoring mechanisms, this fraudulent scheme, some suspicious activity ongoing. Then in that kind of situation, the Bank B would have shared information with Bank C or Bank D. And this last step, when the funds are reaching the fraudster, it could have been avoided actually. And as a result, we would have returned funds in the bank A. So this example of money mule and example of information exchange benefit would result to the real preventive action. The second scheme would be related to purchase fraud. And let's look into the fraudster once again. So let's say that he opened an account in the bank D and is selling some goods. Let's take its car, laptop, mobile phone, and posted some advertisements on the internet selling those goods, and there are always someone who is willing to buy those goods right on the internet, better price. And let's take the same example with the car. So victim saw that the car is cheaper, it's a good deal, so why not to buy it? Then the fraudster usually says, well, the time is flying, there are a lot of people who would like to buy this asset, so therefore please transfer advance payment, or maybe transfer the full amount in order just to safeguard your purchase. And usually in such cases, there are more than one victim buying the same asset and the same good. So what happens? People are buying the same car and sending those payments or advance payments to the same fraudster. What happens next? So usually it doesn't take long for the bank to identify such activity, right, and to stop fraudulent actions. But what happens next? In general, there are no problems or significant issues for the fraudster to open an account in the bank D. And what's next? Then next is the same story, actually. So the customers of other banks are sending funds to the fraudster for the same purpose. So in general, if the information sharing flow would have been successful and implemented in the same environment, then the bank D would have shared the information with the bank E and all other banks across and informed that, well, actual individual is performing fraudulent actions, so, well, please consider risk mitigation measures at that point, and we could have avoided the fraudulent activity in other financial institution, and we could have prevented some losses. Then looking to the really interesting matter, so deterrence and fear of consequences. There is a rhetoric question. So do you need a bank account? So probably everyone would answer that, yes, I definitely need a bank account to live my life properly at this technology age. And I have made a short investigation on the internet and found one article, so called Sharp Rise in People Being Used as Money Mules has left thousands bankless. Really interesting, and why so, and what happened. According to the article, actually, well, some people were fooled and lured into becoming a money mule. So the example what we had in previous slides, and well, those money mule activities left some fraud marker by their name. And usually those people were young workers or students, actually, to facilitate a fraud and crime in order to gain a bit extra cash or extra funds. So when the person wanted actually to withdraw himself from the scheme, they were threatened. And what is really interesting, so this is a UK practice, and there was a marker by the name of the fraudster for 6 years. So, and it was unable to get another bank account. So that is, well, significant time period when you cannot use your financials through some remote channels. And I found out another interesting thing. So where people exchange information, ask questions, so it's forum. And in one of the forums, there was very interesting question. Why can't I open a bank account in UK? I keep getting declined. And well, the forum was very informative, actually. And Christopher Richards answered that if you do indeed have a list of convictions, particularly fraud, no bank will take you on. And it's not an old forum, actually, and the answer was provided in 2022, so this year in January, and the answer was looked there for 27.1 million times. So you can imagine how the question is actual for UK citizens who are unable to use financial institutions to pay for utilities, to buy some clothes even, or some stuff online. So from that perspective, I believe that no fraudster or any, let's say in this example, young worker or student would like to open an account in different banks for money mule purposes and to have a risk for 6 years not to have the capabilities to use a bank account. Interesting thing that in Netherlands, more than 160 banks and insurance have been granted the license to exchange the details of individuals of fraudulent behavior. So this license was granted in the 2021, end of 2021. And it's interesting that it's not only for the form of fraud risk from customer perspective, but as well on the job applications. If someone is applying for the bank or insurance, well, the person is being checked from that as well perspective. This is, well, quite serious thing. So practical benefits of information sharing, let's go all around. So one thing is to stop organized fraudster groups within country, as Tavi mentioned. So let's go step by step, and maybe at first it would be country, later on region, and then later on maybe even more broader scope of financial institutions exchanging the information. Then deterrence, we have already talked about fear from fraudster perspective. Second thing, lower the losses, number of victims related with fraud. The other thing, decrease the number of investigations. So as well, we can think of investigations from law enforcement perspective. So less work for them as well. Identify new fraud schemes. So, well, if one financial institution is facing something significant, definitely it would be valuable for all others to know what's happening, to share the information, and as well to put some fraudster profiles to have preventive mechanisms into force. Simplify investigations. So, yes, the more information we have, the easier investigation is ongoing, as the background is a bit wider. And now stopping victims, really interesting side, as we are mostly talking about fraudsters, stopping fraudsters, why we need to stop some victims here. So let's look into the victim in the bank A. And let's talk about very well-known fraud scheme, Romance fraud. So everyone talked about this one in February, in March. So we are continuing the topic. And yes, the fraud scheme happens online with social communication platforms. Some romance is happening. We find some significant people working outside in military situations, right? Very secret, confidential. Then people are getting in love. And yeah, something is always happening bad there, some explosion, some issue, some limitations. And as we can see, well, the victim is always sending some funds in order to help the fraudster in some cases. So what happens next? Usually, if the bank identifies the victim, let's say in any stage, whether it is a preventive stage, so the funds have not yet left the bank, or it is, well, at the moment, post-factum situation. In general, all the time the banks are communicating with the customers and trying to, well, understand what happened. And usually those questions are a bit strange for the victims. They do not believe the information sent from the bank. They are claiming banks as fraudsters, as well. This is a true love, and this is really happening. And actually, it's a problem on the bank side or financial institution side. And in order not to have those issues, victim opens an account in the bank B. So the same scheme on the left side that you're seeing on the slide, it occurs one more time in the bank B, later on in the bank C, and later on in the bank D. So the question, when usually victim stops? The victim stops when gives all the way the money, finds out that it's fraudster, bank explains the situation, police contacts directly, relatives find out about relationships, and fraudster find richer victim. So if the information exchange would have worked here, in this situation, the bank A would have informed the full spectrum of financial market participants in order to be aware that it's happening, and maybe the financial fraudulent scheme could have been avoided. So the benefit of the exchange is resulting to quite similar things. So stopping the victim to pursue fraudulent scheme. In other financial institution, being preventive, so identifying the situation, informing others, and not dealing with the consequences, reducing number of losses, and reduce pre-trial investigation focused on fraud in law enforcement agencies. So this is shortly from my side today, and if you have any questions, let's take those questions during the panel discussion. Thank you very much.
Thank you, Linas, for wonderful presentation and for wonderful examples. It's always interesting to listen, Linas, and to see all these examples. So that's it. We finished our first part, and now we will be moving to the second part of this event. It will be a panel discussion, and panel discussion will be moderated by Nick Maxwell. All the presenters who presented their cases also will be in the panel discussion. So before panel discussion, let's take 3 minutes, 4 minutes break, and 12 minutes before 3, Let's start the panel discussion. So let's go to the break.
Hi there, fantastic. So we are back, and hopefully my panel is all online and connected. And really, this is the time to kind of discuss some of the big themes which perhaps stretch across the different presentations. And it struck me that there was a lot of optimism, from the opportunity to do things. I think we heard from Tavi that really the legislation and the regulation can be identified to support this activity. We heard from Jekaterina in terms of the data protection perspective about GDPR not being this scary beast, but being an enabler for information sharing, done in the appropriate way. But perhaps we could just kind of really reflect on, well, what are those key challenges holding back information sharing and collaboration, which the panel believe will support greater effectiveness now? Given that there is, optimism about the existing gateways for information sharing, what are those other conditions which might be relevant to adopting the type of capabilities that stakeholders believe will be effective? Perhaps, Imantas, you could start us off from your perspective. I know you've been doing a lot of work in Lithuania about scoping out the opportunity to create a more effective environment. So what are those key challenges from your perspective?
Thank you, Nick. I hope everyone can hear me. Key challenges. There's a lot of key challenges. First of all, you probably all know that our public-private partnership model, which is built in Lithuania, it's a little bit different in general than what we see in all other countries. And the main reason is that because we are a separate unit, we are not part of any public entity, public institution. And from this kind of perspective, it also gives us advantages, but at the same time, it also gives us disadvantages. For example, that we are total separate unit. Yes, we are new unit, and this gives a lot of us. We need to start from the scratch. We need to start from the beginning, which is not so easy sometimes. Moving forward regarding our initiatives, that today in Lithuania, our AML law in general do not allow to change the data between private sector. It's only allowed if it is same customer, same transaction, which is not effective. Let's say that simple. And we initiated the law changes. We initiated this law changes. We started to think, let's say, last autumn. Started to prepare all the documentation last December, and during December and January we prepared, let's say, initiative. We prepared the legal basis, legal documents which would allow to change the AML law in Lithuania in order to change the data between financial institutions. Right now, we already had first round of discussion with Data Protection Inspectorate in Lithuania. And during this week and in the beginning of next week, I hope we will have the second round of discussions with Data Protection Inspectorate. And after that, we're going to the ministries, we're going to the political side. And we are still fingers crossing that during this spring parliament session, we have the changes in the law. And actually, what we see, our geopolitical situation, yes, the war in Ukraine, it's also pushing us and pushing in general that these changes would happen. And we're talking not even about financial crimes. Financial crimes, fraud, and etc. is one thing, but what we also see and what we briefly touched today during presentations, what I heard, sanction question. Sanction question is very relevant, is very important, special sanction evasion question, asset recovery regarding oligarch from Russia, and etc. So to sum up all this, I hope will give us possibility after the law will be changed to start sharing information and to move to the next step regarding platform either creation or either already use the existing one, which I see there a lot across the countries, which also we can use in Lithuania. Nick, back to you.
Thank you. And I suppose from the technologist side and from the financial institutions, Martin, Tavi, Linus, if you had the magic wand for policy change that could create a more conducive environment to the type of outcomes that you're hoping to support, what would be top of that list? Where would you see the need for policy reform in this area? Perhaps we could start with you, Martin.
Yeah, sure. Thank you. Well, maybe to start off, I mean, if we look at it from even sort of a more helicopter view than AML and GDPR, I mean, there is a natural friction, obviously, between how much do we share and about whom, compared to how much do we need to in order to detect financial crime or fraud or what have you. So, I mean, the fact that there is that natural friction, that's not necessarily a bad thing. I think that the challenge that I see is we sometimes lack the regulatory clarity, I think, to see sort of where in how much of a gray area are we operating from time to time. But I think the main thing that, I mean, banking secrecy is obviously a good thing. It's designed to protect, but it's that, to me, based on what we do, puts sort of a blocker from time to time in what I think we could achieve from a financial crime perspective, financial crime protection standpoint. So I mean that's I think an area that would be interesting to look a bit more into. Again, looking at sort of how do we create that network. We are as you were into making your presentation. I mean, whenever you do that in a silo, it becomes very, very limited in its efficiency compared to if we look at it from a broader context, either within sort of all the banks within a country or within a region or what have you. So I think for me, that's probably the area where we as Invidem as a company, but also the market in general, has sort of probably the most to benefit in a way if we're able to share some information a bit more freely than we are today.
Thank you. And Tavi, you're obviously quite bullish on the opportunity to move forward, and that perhaps some of the challenges are more around getting people together and having that kind of energy to do things that haven't been done before. But you're also looking at moving from what you've done in Estonia to other jurisdictions. Again, in terms of the policy issues, which really, are suffering in terms of a lack of clarity, what would you identify? Can you hear me okay, Salv? Tavi? I believe you've just muted on your own browser.
Can you hear me now?
Perfect. Yes, yeah. Thank you, Tavi.
Thank you for the question. Devil is in the details, and other if limitations now, I think the whole Europe would be using all of our technologies that we have discussed here. So one thing is clearly the harmonization across the EU. Like as you heard, like in Lithuania, there is some specific clause which doesn't support banks to exchange. In Latvia and actually also in Sweden, I really like this very clear guidance that companies can rely on other companies' KYC, which is done, and it's like very clearly guided. In Estonia, that's missing. That's allowed, but the push is missing, and the Estonian non-banking institutions are really struggling, and they're lobbying and working with the government to get more stronger guidance or permission that yes, you can rely on the KYC, which is done by the bank or by the third party. So there's a lot of this kind of disharmonies happening, which are confusing the industry. Like we're not always, even with you guys, we're not speaking in exactly the same language because we know our local regulations a bit better. So that's definitely like an EU level, European Commission level. I know the Banking Association, European Banking Association, and the European FinTech Association are working hard to get this harmonization in place, and hopefully it will become like more innovative direction. And the second part, which is clearly missing, is this that Nick also mentioned in the beginning of your talk, this PET technologies or privacy enhancing technologies, which are like a few years ago, starting from UK, there were like really people in the banking sector were really hoping that there's like enhancing privacy and making it less transparent for the other parties and deprivatizing the data or like anonymizing data properly will give opportunity to exchange data more freely and to do more useful investigations by the central parties. But actually what came out was that like the current European, like European-wide, but also local regulations do not support or do not know how to consume this bad technologies. So like technology and products and the needs from the banks are more evolved than actual the legal readiness. And that's why like we were also building originally bad technologies and partnering with a really strong technology providers. But a few years later, we had to come back to the more classical encryption, the end-to-end encryption, which is like it's not a rocket science. It's difficult, but it's not a new thing comparing to bad and zero-proof evidence and stuff. But yeah, like that's where I think industry has to move on with the smaller steps and more clear steps, which are falling under the current legislation. Also, we know that actually there are much better things available and out there, but our EU legislation doesn't actually yet know how to treat them. That's the second biggest, or maybe the biggest thing that we're missing right now.
Thank you very much. And Linus, from your perspective, again, perhaps you had the magic wand. You obviously see a lot of risk coming through the institution. You've talked about the kind of harm caused by lack of information sharing from a fraud perspective. What would be at the top of your mind if you were advocating for an updated policy regime?
Thank you for the question. Actually, together with Eimantas, we are on the same boat as we are operating now, mainly and talking from Lithuania perspective, and then we have some challenges with exchanging information there. But I would like to mention 3 points. So one point is related with speed. So if we would talk about data exchange, very important is the speed and proactiveness. So all the platform that potentially we could have should be like operating very proactively and should be very useful for that. The second thing, data quality. So the information that we would exchange should be very qualitative, properly regulated, and very well described. What is needed in order to pursue and have the goals that we are seeking. And the third thing that is I would say really important. So justice is actually performed by the court, right? So it's a question of the role of financial institution. So when the person can be described as a fraudster, like officially and by the law and by the criminal code, right? Where is the role of the bank or financial institution to describe and to put this mark? As in my presentation, I already mentioned this mark in one platform that persons can be marked there as fraudsters for 6 years, right? So how long the information should be kept, on what grounds, and the question as well, can the fraudster make a complaint, and what kind of evidence base should be there in place in order to agree on the topic whether a person should be removed or kept there, and who would be appointed as an institution, let's say, investigating those complaints between private individuals and the financial institutions. So some challenges to be written down and to be discussed, but as Ekaterina mentioned today, everything is doable, everything is manageable, and GDPR is not that, as we can say, monster that we could not live with. It's like more a balance and a balanced opinion between the financial sector and data protection authorities.
Thank you very much. And Ekaterina, from your perspective, you again were very positive about the opportunity to use the GDPR regime and have a supporting framework for some of these capabilities, but yet we don't see it, generally being rolled out across the EU. We have some kind of more technical questions coming through from the audience, which I'll also fire to you after you get a chance to speak. But from your perspective, in Latvia, you have a quite clear enabling law, which can support a legal basis in GDPR for compliance with law, with that particular capability. Where do you see the challenges perhaps in other jurisdictions from your perspective?
I think that these challenges is what was mentioned also by Tavi. It's a national approach, because in many cases, most cases, each DPA has their own jurisdiction and their own understanding on how this law rules have to be performed, and where is this balance, because it's also to set the balance you have to have this common understanding and one like how you interpret these rules, so to get agreement as well where is this balance. And what I think is at the moment is lack as well within the cooperation between the regulators, not only like data protection regulators, but also the regulators of the financial institutions, because it's also when you see guidelines, for example, when data protection authorities set the guidelines, it's like more restrictive. When the financial institutions regulators put the guidelines, it's like more abroad. And then in the middle, there is private sector who looks at the two documents and does not know and not quite sure how to make compliant or both of them. So one thing, and maybe it's global thing, but to make also some forums between the regulators on the EU level to set these common balances. It's one thing, and then went by practice, I think, and maybe with the time, because as well GDPR it's only 3 years, and 3 years from the perspective of the countries and legislation, it's not so long time. And we all now in the process as well, when we understand what we have to elaborate, what we have to do to make it better. And maybe before and during the new legislation, this is as well cooperation between the regulators and legislator. It's quite important, and as well maybe for the legislator to be quite honest for the data subject, for the people, and saying that we are staying on this balance, and now maybe we understand that within these circumstances, this IML perspective and financial institutions' necessity to know more about the client is in more priority than, for example, your privacy. So it's as well up to the legislator. Thank you.
Thank you very much. Tavi, you want to come in there?
A small comment. Katerina, you reminded me actually that one of the causes that we haven't discussed, which is putting different countries into different positions, is actually the PR and media and like previous experience with GDPR and privacy from the other sectors maybe. So like many countries have had massive scandals in the media level about like sharing your mobile device location data due to COVID, or some companies have some medical records being not leaked but not handled properly. Yeah, and like media and publicity is super sensitive. And now we're speaking in completely different angle from the financial sector. Then still we need to keep in mind that okay, maybe in this particular country, media is super sensitive about data sharing, GDPR in general. So, and this might be slowing down the companies and then the regulators' interest. So things doesn't only need to be legal, but it has to look legal, and it needs to be like loved by the PR and publicity as well. And that's one of the reasons why we have been doing so much PR work from our side in Estonia, like all the public things and like press releases and stuff. It's not only to bring more attention to that, but it's also about like encouraging people that it's the right thing to do, and not to prevent these kind of scandals, which might not have even legal basis for that, but there's still scandals are happening. That's something we all need to be quite cautious of. It was just a remark that I wanted to make.
No, thank you. And I think we'll come back to this theme. Obviously, Linus mentioned it as well about, well, what's that broader consensus around the view of the private sector, given that we have the opportunity with technology to be much more capable for a particular outcome. But perhaps there isn't, in some cases, the political full support, or at least it's a political question about what the role of the private sector should be in part of this response to essentially criminal threats. There is a view that the future should be that the private sector really does take on this gap, which is left by the limited resources of the state to deal with complex economic crimes, and that there should be an impact against crime which is achieved by the private sector outside of the judicial process. But, there are some complex questions there. Let's come back to that in a moment. But first, we've just got some questions from the audience. Jekaterina, from a kind of legal and GDPR question perspective. So a point around the prohibition on automated decision-making within Article 22 of GDPR, and a view that that prohibition does not necessarily sit well with the opportunity to run machine learning or other analytical processes across large financial data sets, particularly if you're talking about combined data. Do you see that as a barrier, or what would be your response to an apparent conflict between the prohibition on automated decision making and efficiency and effectiveness on AML transaction monitoring analytics?
Okay, thank you for the question. I don't think that this Article 22 and prohibition of the automatic decision making is the obstacle, because as well, we have to understand that GDPR is made for the whole sectors, whole countries, whole controllers. So there could be very, very different situations. And the Article 22 of the GDPR prescribes as well when this automatic decision is possible. So it's not like the GDPR said that you cannot do it, but GDPR said that there have to be then, for example, legal obligations, so prescription of the law. And this is one more time, it's also this one safeguard to saying if legislator with the regulators understands that in this certain area, for these certain purposes, we need this automatic decision making, then it is possible also to make such a legal obligations legislation which is said that it is possible, and then this as well, like for the financial institution, they can do it. Notwithstanding with this, I would say that still GDPR as well, the same article has the point that if there was this automatic decision making, there have to be possibility to reanalyze and to recheck this decision by the human person if the data subject is not content with this, or if there is some claim. And in this case, I think that this is necessary balance because technical systems are very clever, but still they can have some different prescriptions and remarks and decision making. So when this decision is made, and if when there is some separate cases when person is claiming that this is not correct decision because the data is not accurate, for example, or the quality of data distinguishes, then there have to be possibility on this individual basis to look at this certain decision. But I think as well, this is not the obstacle to not make it happen on the practical level. Thank you.
Thank you. And I think that's a really important point, that I think we would all recognize is the fallibility of these systems, particularly in an AML world historically that has suffered from very high false positives. And the value of having that check and balance process that GDPR introduces, but obviously finding that right balance. We have another question from the floor, and it's again a GDPR question. The others may have a view. So Jekaterina first, in terms of the prohibition on tipping off, which is really embedded into many money laundering legal frameworks and in the EU through the AML directives. So there's a prohibition on tipping off the customer who may be subject to an AML investigation and reporting, and a conflict with the obligation under Article 15.1 of GDPR that subjects have a right to know if they're subjected to decision making. Do you see a conflict there, or again, do you just see that as, well, when there's a lawful basis created by legislators, then GDPR can respect that?
Yes, exactly. And in GDPR, by the way, have the Article 23. And the Article 23 prescribed that in certain cases, when in some areas, and anti-money laundering area is mentioned in this article, you can as well restrict the data subject rights. And this is done in other areas. For example, in the criminal cases areas, if the data subject will submit a claim to get all the information on him in criminal cases on the certain, for example, operative issue study, of course, they will not give police or some other criminal investigators will not keep this information, because if person will know that, for example, his phone is checked, he will not say anything criminal, and that's why these criminal cases would not be open. So there is these balances between the data protection and the necessity, but what is important, it's to really understand that this is necessary, because in many cases, what we have talked as well with error banks, if, for example, this is information which client have given to the bank, and he asks which information bank is processing about me, then where the obstacles for the bank to give back the information which client have given by them himself. So there's nothing to hide in this case, and in this case, this Article 15 of the GDPR could be as well implemented, and some information could be given to the data subject. Not all the information which is processed by the financial authorities is protected by the AML, but of course I can understand the challenge to have this balanced. And from my point of view, it has to be set in the law. And we, as for example in Latvia, as Data State Inspectorate, already informed, like Ministry of Finance, to start the discussions on these restrictions of the data subject right and put them correctly in the law. Not maybe like everything out, but to set these rules how the data subject right could be performed according to the GDPR, and how, in which cases not. Thank you.
Thank you very much. Tavi, you have your hand up, and I want to move as a panel to really think about cross-border issues as well. But before we do that, we'll speak to Tavi, and then I'd like to come back to Imantas just around this point around, public consent, political consensus around, this role for the private sector, which could be much more capable with regards to identifying and indeed restricting financial crime threats. Do you feel it's there in Lithuania? You're right there in the middle of the policy development process. What's missing? What's missing from an evidence perspective, or even a PR perspective, as Tavi has talked through. Tavi.
Yes, just a small remark about this tipping off without the subject's right to know about the stuff, but just in general, that's the question that we keep getting, or we kept getting, that, okay, what if I report my customer's data to the other bank, and this other bank AML team leakages sends it out to the end user, and it's a tipping off, and it's really bad. The practice is that we have had zero cases in practice regarding to that, and there are preventions built in for that. It's contractual responsibility between the banks or joiners of the network. They claim that they are not doing that. There is also professionality, it is community-based approach, and if your AML team is strong enough, then other AML team is also strong enough, and they know what they can do and cannot do, and this kind of control mechanisms really limit the risk of the tipping off. It's there, but it's very little, much smaller comparing to the original doubt that people have before joining the networks. That was just a small comment about tipping off that you reminded me.
Just before we move on from tipping off, Linus, you obviously mentioned the fraud examples in the UK. And I think what's interesting is that some of those fraud information sharing platforms do engage with the data subject, and they do tip off the data subject in that they inform either proactively or reactively that a certain data subject has been included onto the platform. Some of these do, some of them don't. Do you have a view about that, Linus, perhaps from a, what makes most sense? Obviously, we've kind of moved along this process of avoiding tipping off because that has a kind of natural logic to it if we're really focused on supporting a criminal justice outcome. But if we're really focused on preventing and deterring behavior, then is there more of a value actually in the data subject being made aware of some of this processing? Linus, do you have any thoughts on that?
Yes, thank you really for the question. So actually, if you would inform the fraudster that, we have included you in one or another list, that would lose probably the full preventive mechanism there. And probably the GDPR could have some exceptions, right? In some cases, when we're talking about AML, when we talk about fraud, when we talk about prevention and public interest here, I would say it should be valuable not to inform the fraudster that, you have been included, but as well to have clear guidance and evidences that it would be in line with the law having such exception. And one additional thing I would like to have as well a remark towards the evidence that we have or not have. So actually, in Lithuania, cases increased twice, according to Lithuanian Bank Association information, from 2020 up to 2021. So it's gone up significantly, and the topic is being raised as well significantly. Now we can see as well in the media, all the financial institutions are proactively raising awareness, as well customers, if they are victims of some fraud schemes, they are informing media in order to as well raise awareness, share the practice that it happened. And usually if it's a bigger amount, then definitely people are going to the media, explain and share what happened. So we have more than enough evidence that it's happening, it's an issue, and it would be beneficial to have this information exchange, good partnership to have those benefits that we have discussed today.
Thank you. And Imantas, my question about, do we really have that kind of policy consensus that we do want this collaboration, we do want this forward role of the private sector to address some of these threats? What's your view from Lithuania?
Yes. Thank you for the question. And in general, I'm seeing this as a puzzle. So in order to create a puzzle, to build a puzzle, we need all the puzzle details. Yes. And how we done in Lithuania? So we started first of all by agreeing by financial institution that we need this. So financial institution agreed. So one puzzle we have. Then we needed to bring into the working group our FSA, our FOU, our ministries, our Ministry of Finance, our Ministry of Internal Affairs also joined, and also we needed to definitely to agree with our data protection inspection that we're starting this process and they will be involved from the beginning. Because if you have involved them from the beginning, first of all, you will have let's say respect, I would say, with data protection inspection, and second of all, you can fix the mistakes or add additional information in the beginning of a phrase in order not to lose all your project in the end of the day, in the end of the process. So we all this have. Now what we probably missing, what already Tavi said and what we already started to do it. So we started to work with publicity campaign, and in order also to convince, let's say, from that all people that information sharing regarding fraud cases, regarding sanction cases, and some other cases which is related with AML, it's really okay in order to to protect them, I mean society, first of all, and to fight financial crime in general. And at the end of the day, we need agreement in the parliament. At least what we see right now in Lithuania, we have it. We just need to finalize it and to do it in the correct way. Thank you.
Thank you very much. And now I'd like to move to the international or cross-border piece. I'll come to you first, Martin. But in terms of the question of, okay, well, this domestic activity we see taking place is very well and good, but crime is so easily spread across borders, and money laundering approaches are very easily spread cross-border. What's the ambition, or what would you like to see in first, I suppose, the Baltic and Nordic region, if there's an opportunity there for, that more advanced region, really, when it comes to information sharing, to engage in cross-border information sharing, and then at the EU level, what would you like to see from stakeholders there? Martin, to you first.
Yeah, I was just going to thank you. I was just going to also comment, sort of from the public relations perspective, or sort of the general view in terms of GDPR scandals or what have you in the past. I think that's a very fair point, but you could also sort of make the other point, and I think the push that we see, or that I see, is the more sort of the different issues for the financial institutions come out in terms of lacking the strength to stop financial crime, and the different sort of scandals that have come out with some of the Nordic banks and what has happened in the Baltics. I almost feel like there's also a push from that other direction, from the corporates, that there is a willingness to share information, because the threat of financial crime and terrorism within our regions has become more sort of tangible and hit a bit closer to home. I almost feel like there's sort of a higher degree of understanding in terms of giving up some of that sort of personal privacy to get the banks to be able to sort of be more efficient in their fight against financial crime. So I think that certainly goes both ways, I think, for me, from what I see, at least in Sweden and the Nordics. And then I think on the second question, like I said, for as far as our service and our ownership goes, we have a very tight collaboration within the Nordics, and the banks that own our company and that sort of are the first users of our company are obviously both Nordic and have presence in the Baltics. So I think from sort of when looking how to take something that's more local, either sort of country or small region like the Nordics, I think the way to do it is to start with something and then expanding it. And then it would be very natural, I think, to expand, for example, something that started in either the Nordics or the Baltics to either the Nordics or the Baltics, depending on sort of where it started. And I think it's been really interesting to hear about sort of the work that you guys are doing, Tavi, in terms of being able to share information in a way that at least I don't think exists in our market to that extent. So I think it's only natural to start somewhere and then branching it out, as opposed to sort of starting with EU and Europe. I think that's probably a more difficult route to take it.
Fantastic. I'm going to challenge the panelists to give me a tweet-sized response on where they'd like to see the future on cross-border information sharing. Tavi, perhaps you could start.
Tweet size, I would say, be concrete and be close. Like it's about specific cases, crime scenarios, and like concrete, like peer-wise, from me to you, from Swed to SEB, from LHV to Deutsche Bank. That's APP fraud. That's like sanction. This helps to be more faster with adoption.
Fantastic. That was too long of a tweet, though. I don't think that would have got through Twitter. Linus, do you have a vision for the future?
In short, I would say shoulder-to-shoulder collaboration and proactive exchange would be like significant towards prevention.
Thank you. And Jekaterina, observing this financial crime world, where would you like to see them get to if you had a kind of headline for the next few years?
I would say a balanced approach and common understanding.
Very good. I think very clear from your comments throughout the event. Thank you. And Imantas, the floor is yours to have the final word about how you would like to see this agenda develop over the years to come.
Thank you, Nick. And in general, what I would say that sometimes to be a small country is advantage, and I'm pretty sure, and I strongly believe that Baltics can be really great example for all other countries how public to private, even private to private information can be shared and how it can be used. In general, what my takeaways from today's discussion and from today's all the event. So first of all, GDPR is not an obstacle. GDPR just set the rules, which helps and supports. If you will follow all the rules in the end of the day, it only will help to have really great information sharing mechanism, if you can say like that. From another angle, the second thing what I'm taking and what Nick presented in the beginning, that there are a lot of different approaches across the world. Even in Europe, there is a lot of different approaches, and looks like that currently we can say that one size do not fit for all countries, and probably it is correct. However, we should aim to reach that. Even the different size mechanism can be used in future for information sharing across the borders. And by closing today's event, I would like to highlight a few more things. So we need to collaborate and work collectively. Close cooperation between public-private, private-private, and public-public will play a major role in a successful financial crime prevention. And also the technology part is a key thing which can support us in the future developments, which was already said by Tavi. And with a final note, I would like to thank to all the speakers, first of all, for accepting our invitation and dedicating your times to share your knowledge and your achievements during today's event. Many thanks to all our attendees, our partners. We really expect that we will continue our great partnership, and in the future, we will be able to invite you all to many more financial crime meetings. And I hope in person also. So have a nice the rest of the day to everyone, and see you next time.